The following is a presentation of TFNN. It is now time for Trade What You See with your host, Larry Pesavento. Now, Larry Pesavento.
Okay, good afternoon, folks. If you have any questions, it's 877-927-6648. We've got a couple of markets that are really important levels. The gold and silver markets are at extremely important levels, $12.25 in the gold and $19 an ounce in the silver, which is hit the 786. So it's going to be very interesting whether we're going to hold this level. Now, as you recall, several weeks ago, I talked about the big cycles that were coming in November, and as you can see, we're right down in this zone here, where from the 22nd through the 25th, where we had all of these aspects coming together. In other words, they're all getting ready to take off in different directions, folks. They're just pretty non-existent right now, but by tomorrow, they're all going to be moving in some direction very, very quickly, and I expect volatility to increase a great deal. The little bear cave that I live in used to have a few people there, but we lost Robert Prechter last week of the Elliott Wave theory. He said he didn't know where the market was going, except it was going to go higher. And then over the weekend, Hugh Hendry, one of the big hedge fund billionaires, said that you can't be bearish in this area. Same thing with Jeremy Grantham. He also guessed that the stocks were going to go up another 20-30%. Now, these guys that are really, really, really bearish have turned around. Richard Russell of the Dow theory, he said that he wouldn't be surprised to see an upside explosion in stocks. And then there was another fellow from Nomura Securities that was also very bearish. They all threw in the towels. Well, when I read that early over the weekend, I just go to my charts and I look and I try to see what I've done wrong and what I've missed, and I don't know whether I could be wrong on everything, but I went and looked at some of these things, and they're actually a little bit scary. One of the charts that I want to put up next is the new high to new low ratio. And that hasn't even gone higher since May. In other words, we've not made new highs versus new lows, but one time, since May we have not broken out. We've just been in a long trading range, which means there's some selling going along that area. Now, for the newsletter this week, I went through about 15 of the Dow stocks. I just picked them at random. And then when I started to do it, I did all 30, but I put the random ones into the newsletter because I didn't want to, put 30 charts into a newsletter and not be able to cover some of the other things. But you've got about 15 of the Dow stocks that are in bear markets, and you've got 15 of them are in bull markets. But the ones that are price-weighted, the ones that are very, heavily priced, these are the ones that are going up, and that makes the index very strong because they are price-weighted. If you look at IBM at 172, it has a lot more weight than we have with Cisco, and Cisco is just in a flat-out bear market. I mean, it just looks horrible. And then I looked at J.P. Morgan because of all the problems that they have, and J.P. Morgan is still in a big downtrend from 2009. But I believe that they ought to give Jamie Dimon the Man of the Year award, because anybody that can lose $13 billion in fines and stuff and still hold his job really must be one heck of a good politician. Because, to lose that kind of money, it just really is amazing that, that he can go through and still be the king of Wall Street. I guess he's no longer Mr. Obama's best friend at all, but oh, please don't tell me that the computers are locked up on me again. I've had more trouble with that. Okay, I went and looked at the rest of the work that I'm doing here, and the long-term chart of the weekly chart of the New York Stock Exchange Index, which is the real stock market, it's still making a double top. It's still going up and making a 3-drive pattern. It's still got the ABCDs. All of these patterns are just extending by a little bit. They're not going crazy yet. I mean, they might explode and go to the upside. Martin Armstrong, who is a very popular technician and market follower, he believes that we're going to explode to the upside here in some type of a huge blow-off of some kind, and so does Jim Flanagan of the GAN Educators. And when I look at these charts, they're finishing. They might end that way, but that's not what it's looking like to me, because the advanced decline line is not looking very good. The new highs to new lows is not looking very good. The market's up a little bit, but that's the nature of it just going higher. Everybody wants to buy it. So, but the three things that scare me the most are the fact that we have the margin debt as high as it's been since 1929. It's also the fact that we've got more bulls versus bears than we've had, I think, since 2000, when we had the internet bubble. And so it's got a lot of. And third thing is all these patterns, even the long-term ones, are completing, with a great deal of power, and that's what you're looking at. We're up into this area of 181 in the S&P cash. We've got the Dow up about 30, the S&P up about 5, and the NASDAQ up about 6 so far today. So the market is still, going higher, but we're losing bears all the time, and that's what you have to have. You got to get the people all on the right side of the market, folks. Let's go back to September of last year when we had Apple at $700 a share, and we were talking about the potential top in Apple. If you recall, there were 34 analysts on Wall Street that cover Apple. There were 34 bullish analysts when Apple was at $700 a share. Their price objectives were from $840 to $1,200. Those were the price objectives on Apple before it dropped in half. So when you hear these things, take them, you have to do your own work and everything. And remember that I'm a technician, folks. This stuff doesn't work all the time, but when everything lines up like it is now, I feel very, very confident that it's getting ready to turn. It just hasn't turned as yet. I know I said in my letter several times, once we go below 1742 in the cash, the S&P futures, then that's going to be a sign that we're going to be triggered. You could raise that now to under last week's low. So if you go under 1760, I would believe that would be the signal. It was very difficult for me today, for this weekend, because I really wanted to put a big sell signal on the S&P, but I said, well, I better wait, because there's a possibility this thing might blow off, to some ridiculous figure like 17,000 in the Dow, or who knows where it could go. So I thought I'd waited a couple of days just to see if I would do it. But if this were any other time, I would be in there selling right now, right after the open, and just put a 10-point stop on the S&P and let her rip, because you've got the cycles coming due. You've got all these patterns are completing, and it just looks like everything is done. Now, I know that, when you go back in history, I cry wolf once in a while. Sometimes the wolf is right. Sometimes the Goldilocks is right. But there's, if you go back to see where we were, I wanted to bring this. Oh dear, hold on a second. I've lost a chart, because I think it's an important one that we look at it because of the fact of where we were. I want you to think in reverse of where we were when times were really bad, and we didn't know if we were going to save the economy or not. With the help of Hank Paulson and all his other friends, Geithner and I can't remember the other fellows' names. They oh dear, hold on just a second. I'm having a slight computer malfunction here, but I wanted to show this one chart, because this is the exact opposite of what we've got going right now. And I just want to, if I can find it, I had it here, and now it's disappeared. I guess I could tell a few jokes as we go through, but that wouldn't be any good because my jokes are rather stale today. 32 degrees in Tucson today, folks. That's how bad it was. Okay, here's the one that I wanted to show you. This is what the market was doing on March the 5th of 2009. That's what it looked like. That was the end of the world. We were trading at 666 in the S&P, 6,400 in the Dow, and that's pretty much what was happening. So we have the same type of pattern happening now, but it's even more pronounced because it's stretched out and has gone to like 3 or 4 other patterns that are also forming at the same time. So we've got multiple things telling us that this is certainly not the time to be selling stocks. I mean, that's certainly not the time to be buying stocks. That is the bottom line of what we're looking at. I wanted to bring out this also the chart on the new highs to new lows. As you can see, after we had that October bottom where we had the largest up day in the move, over 300 points in the Dow, every Dow stock was up, and 98% of the S&P 500 stocks were up on October 11th, which was our big cycle date. And we went went straight up. But since that time, you see the ratios of new highs to new lows has been making lower highs. That means there's not that many stocks that are going up making new highs. There's more coming in making new lows. That's a sign of weakness in the market, because if it were strong, it would be continuing, stronger than they ordinarily would. Now, the ARMS index, I don't use that very often, but Arch Crawford brought it to my attention over the weekend, and that is it's a market indicator that shows the relationship of number of stocks that are increasing and decreasing, advancing or declining, and it's also related to volume. And so as you can see here, that ever since June, we've been having a very, very poor ARMS index. Now, this could change on a big day where the market blows up to the upside, but just looking at this over the last 6 months, this is not the picture of a market that is accumulating lots and lots of buyers. That's what it looks like. Now, remember, this is all technical stuff. Might be mumbo jumbo to you, but that's what we look at. I wanted to just for general purposes and just to show where we are on some of these things, I wanted to show you the Dow Jones Utility Index, because all we've done is gone up to the 61% retracement 3 weeks ago, and we've never broken that out to the upside. Got Dow up 30, S&P up 4, and the NASDAQ up 6.
Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads. You take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective. Direction Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foreside Fund Services, LLC. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartleys, ABCs, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com. With over 3 decades of trading experience, Andy Hecht brings a tremendous amount of knowledge and expertise to each weekly issue of his newsletter, the Technomental Commodity Report. The Technomental Commodity Report gives you Andy's unique technomental analysis of the commodities market, a combination of technicals and fundamental analysis which he has developed and perfected over his many years of trading. The Technomental Commodity Report is only $49 a month, and right now you can get a full month-long trial subscription while paying absolutely nothing. See for yourself the kind of weekly report Andy delivers to his subscribers every Thursday morning. You'll receive specific stock, ETF, and option trades based on Andy's analysis, so no futures account is required. For all the details and to start your month-long free trial to the Technomental Commodity Report, visit TFNN.com today.
Larry takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Okay, we're back, folks, and we've got our first caller, John from Philly. Are you there, John?
Hey, Larry. Thanks for taking the call, sir.
My pleasure, my friend. What can I do for you?
Hey, Larry, I wanted to ask if you could pull up both the daily and the weekly chart on the bond futures contract and address the question I've got. The low that was made last week down near about 130 and 1/2. Does this setup look to you as if a rally could ensue taking it back to 135, 136, or do you see something less? That's my question.
John, I'll tell you, I posted the 30-year T-bond chart, 60-minute chart in there. We broke the 61% retracement at 31. The rally back that we've had today has been a 61% retracement off the high at 133. John, this chart to me looks getting more and more bearish as we go along. Why? We got these lower highs occurring all the time, and I think that if it's a question that if we don't get moving here to the upside really quick, this is nothing more than a 3 or 4 day rally that we've had many times before. That's what it's looking like to me. I'm sure the Federal Reserve will come in and, save everybody's bacon when the time comes. But frankly, it doesn't look very bullish to me anymore. Once we broke that 131, all we're doing now is having, just a little bit of little bit of a snapback rally. That's what it looks like to me.
I appreciate that input. I can share an observation. In addition to charting and following the price patterns on the bond futures contracts, I look at the cash bonds themselves as well as the yields. And that low that occurred last week, I believe that was Thursday, the low in the bond futures contract at 130.5, the corresponding yield on the 30-year Treasury made a peak up near 393, 394. That was exactly the high yield back at late August, right before Labor Day. And my thinking is, or just an observation, now that we've gone to it, yield-wise, pulled back, the bonds have fallen down and now bounced. If the yield now goes back up, surpasses that high of last week, or conversely, if the bond futures now goes and breaks that low of last week, that we could have some real aggressive movements. So just wanted to share that and see if that strikes you similarly.
It certainly does. I'm watching these lower highs all along because, markets that are really strong, they go up and they make new highs, but when they stop doing that, then it really makes you wonder, why it's not doing that. I'm watching momentum in the stock market, the fact that we're not making, advancing and declining volume highs. We're not having a good ratio of new highs to new lows in the market. And yet the Dow Jones, which they watch all the time, continues to go up. But, the New York Stock Exchange Index does not do that. It hasn't even taken out the highs from late October yet. It might today, but right now it certainly doesn't look that good. So I'm just watching it on a technical basis. But your idea on the bonds is correct. If we take out that 131 level, I think you're going to see rates start to move and move very quickly to the upside.
Hey, Larry, I appreciate that. I might ask you in parting if you might just share with us your commentary on the HUI or the XAU indices. They're making new lows here. I'm wondering if there's any setup that you see any sort of bottoming pattern, be it a butterfly bottoming pattern or a three-drive pattern. I haven't had the chance to look very closely. Thought you might have.
John, I'll do that right after the break as we're coming up to a break here, but frankly, I couldn't see anything. I looked at it over the weekend. I know that we're at a real critical level at $12.25, and the gold that we hit earlier today, we rallied about $20, and silver at around $19.50 is very important. But these gold stocks and gold mining stocks have been bearish for so long that I don't see anything happening. I will post it up after the break, but they're below the 786. They're not showing any sign of any strength at all. So if the market does blow off to the upside, that'll probably pull them along with it. But right now they just look horrible. I can't see any reason to buy them.
Yeah, nor can I. Just wanted to get your read. So thanks so much. I appreciate it, sir.
And happy holidays to you, John.
You as well.
Okay, we got the Dow up about 30, S&P up 5, and the NASDAQ up 6.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock in option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
No matter where you listen to TFNN programming, we want you to know you can always access your favorite shows on demand through TFNN.com. TFNN airs live programming every market day from 9 a.m. till 6 p.m. Eastern, and you can view each program by accessing Tiger TV through our homepage. We even have an easy link for all mobile devices, including iPhones and iPads, located at the top right-hand corner of the TFNN homepage. You can use your smartphone to view Tiger TV, but if you don't have a mobile connection that can keep up with streaming live video, then you can simply visit TFNN.mobi in the browser of your smartphone for live streaming audio of all of our programs. The mission of TFNN is to educate our audience directly and interactively through our interactive website and radio call and talk shows. TFNN is able to teach all levels of investors the technical skills needed to trade in today's marketplace. In order to get the best information possible, TFNN has assembled the most respected financial minds in the country to provide the most current news and comprehensive advice available. TFNN.com. Educating investors. This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Okay, we're back, folks, and we've got a call from Victor in New Jersey. Are you there, Victor? I guess I waited too long. He had a question about Intel, and Intel has made a bearish Gartley 3 days ago and has broken a little over 10%. So that's another one of the Dow stocks that looks very, very poor. And that's just one after another. They're making these patterns. Sometimes they take days to form. Other times they take weeks. But Intel's been in a very bearish pattern, for quite some time. So right now it looks like it wants to go lower. Now, the next chart that I wanted to put in was one that John from Philadelphia talked about, and that's the XAU, which is the silver and gold mining stocks. And as you can see, we do have a butterfly pattern forming right now. It's making new lows at 84. The butterfly pattern ends at around 71, which is near the old low from back in 2009. I think if anybody would have said that you'd been long gold and silver stocks since 2009 and heard that the Dow Jones was trading above 16,000, you would have thought you would have made a lot of money. And as you can see from this chart, we're back to where we were in 2009. Folks, there's a lot of problems in the commodity markets. There's not a lot of them going up. We have the meats going up, and that's mainly because they're feeding cheap corn, and they're putting weight on the cattle and the hogs because it's easier to do that than to sell the cheap corn and sorghum and stuff like that. So other than that, if you look at oil and gold and silver and all the corn, they're all they're all getting hit. I mean, that's not a sign of a real robust economy, in my opinion. I could be 100% wrong, but this gold-silver index is telling you that it wants to go lower. We're at a really critical level in the gold and the silver today, as we mentioned before. 1950 in the per ounce in the silver, and 1225 is very important in the gold. So that's what's going to be the main thing that will be the spot from here to look at it. Someone asked a question about the relationship between the cash S&P and the gold, and gold has been coming down for months. Well, since September of last year, and stocks have been going straight up. Everybody wants stocks. My God, you can tell it by the bullish consensus, for God's sakes. The VIX index is, it's been at a low level before, but, we're making almost new lows as we speak, and it looks very, very, ominous, to see the fact that the darn thing does not want to, to even go any higher at all. So this is the reason why, these things exist, is because you've got to get people incredibly bullish, and that's what's happening. Why didn't the small investor come in until just a few weeks ago? I mean, give me a break. The market's been going up since 2009. You couldn't get anybody to buy it in 2009. And now everybody's, talking about 17,000 in the Dow and 1,900 in the S&P. And we could get those figures. But usually they don't let the little guy win very often, especially with this margin debt the way that it is. It's got a lot of things that should be really scare the heck out of you if you're a technician. If you're not a technician, I don't think it would make a whole lot of difference. You wouldn't be scared of anything. But that's just the way that I see it. It's just got a lot of things telling us, that we really don't have something to hang our hat on. I wanted to show you I'm going to show you a few of the Dow stocks here right now. First, I'm going to look at Caterpillar. This stock used to sell for 117 back during the drought time we had a year or so ago, and now you see it's been in this pennant on the downside with lower tops for quite some time. It looks like we're ready to break out to the downside at $82 a share. That's one of them that looks, very, very, interesting. I'll just pull these out at random because I wanted to show you that some of them look incredibly bullish and others don't. Now here's Visa, the MasterCard people. We made 3 drives to a top. We still have a potential to get up to 209 that closed at 202 on Friday, but at 209 it would complete a very large butterfly pattern going over, well over a year. So that has a little bit more potential in it, but actually not a great deal when you look at it on a regular format. Now, this is one of my favorites. The next one is Goldman Sachs. And if you'll take a look at this Goldman Sachs on the weekly basis, you'll see this 1, 2, 3, 4, 5 expanding triangle pattern. That's the pattern that we're seeing in the Dow Jones. That's the pattern that we're seeing in the S&P 500. And that's the pattern that we're seeing in the New York Stock Exchange Index. So it's a very, very bearish pattern, and you can see what happened. It went from 248 down to 57 during the big crash before Warren Buffett came to the rescue and bailed them out. And all that Goldman Sachs has done over the past year and a half is just make a 78% retracement up here at the 170 level. So there again, it's just rallying back to a point of really strong resistance. That's really what you're looking at when you're doing some of these. The next one, which is based on a lot of home building and stuff, is Home Depot. As you can see, we made a big ABCD butterfly there a few days ago, and the market has dropped several dollars. So it's telling us that some of these are under a little bit of pressure, and they don't look nearly as bullish, as they as you think that they might. That's the bottom line of some of these Dow stocks. Now, the one stock that I've already covered this, I want to cover it again though, is American Express. That has the same pattern as the Dow Jones with its expanding triangle up at this level of 1.618, up around this 84 level in American Express. So these are the ones that we're looking at, and half the Dow stocks look really good, folks, and half of them are in really severe bear markets that make you wonder, why you're doing or why you're being so bullish is because of the fact that these things look so difficult from the other side. But when you look at all the momentum and everything else that's there, boy, is it hard to be bullish. And it's really easy for me as a technician to be just extremely bearish, because it just makes us realize that somebody is, I don't know if somebody's the right word or not, but the market itself is telling us that it's got some problems underneath, but no one seems to see it except me, so I must be the one that screwed up. That's the only thing I can figure. Not all these guys can be wrong, so we'll see what happens. But I can't change what I see. I mean, it's just right there in front of me. I'm wrong right now, but if it does turn, then we'll see if it, in fact, will have a, some type of a correction. One of the guys that was really bullish, the stock market, and he's still very bullish, he thought that we might get a 2%, maybe even a 3% correction sometime in 2014. I mean, wow, that's really saying something, 2 or 3% for 2014. Boy, that guy's really bullish. I mean, who would think that a 2 or 3% would be considered a standard, correction, in the fact that it's so very, very shallow, as a matter of fact. Now, I want to switch over to the currencies for a bit, because we've had the situation where we had a pretty good rally in the euro over the last few days, and all we've done in the euro is we've been able to rally back to the 786 retracement. We're backing off a little bit from a highs overnight. We've come down about 50 pips. Our support down here will be at around 133.50 if it gets to that level, because that would form a bullish Gartley. But longer term, if you take a look at the euro, you'll see that it has a very, very bearish overtone to it, to the downside, because we've had lower tops for a considerable length of time here in the euro, going back to 2008, 2009, 2011, and again in 2013. We've had lower tops, 3 very significant ones along the way. So this is not the time, to be bullish on the euro based on, what we're looking at in the chart patterns. I think that, the real key here with some of these markets is the fact that you've got markets like, gold and silver that have been going, straight down, and yet you've had other markets like the Japanese yen versus the U.S. dollar that have had a tremendous rally. Well, that is related to what happens in Japan with the Nikkei, because the correlation between the dollar-yen trade and the Nikkei stock market is about 90%. So if that goes up, the Nikkei stock market usually goes up. So that's the bottom line of what's occurring when we're watching some of these things unfold. Now, we had a very interesting move in copper. I think we should let all of our friends see this, because it's quite nice. All I have to do is just do a quick little thing here to show you the retracement levels, and you'll see what happened. It was really amazing, because last night copper, after it made the Gartley down there, we talked about this on the commodity show last Thursday, the Gartley down at the 313 per pound level, is that we spiked up last night $5 a pound from 13 all the way up to 325, which was the 61% retracement off of the high on the 21st of October. So here you've got lower highs in copper, all along. Now this still has the potential to be quite bullish, but right now it's made the exact 61% retracement of the last down move, which tells us that we're still in basically the the same situation of where we were before. Okay, if we have any questions, it's 877-927-6648. That's the bottom line. If you'd like to bring your thoughts to us, if you have psychological counseling, I can do a little bit of that. Marriage counseling, I can do a little bit of that. I'm just a jack of all trades and the master of none. Just don't go short stocks until I get out. And then you can go short, and you'll be very, very pleased, I'm sure. Actually, I have a very small short position on, hurting me a little bit, but really not very much. And but the other things that I've been having, I've been, short gold and silver, not silver, but been short gold, long a little copper these last few days. So that's been pretty the same. So one of our listeners asked us, what's the key to a good marriage? And that is just say yes to your spouse, and that'll usually take care of any problems that you might have. Because saying no does not really help too much on that front. It's pretty much like the market. You can't fight the trend, and usually she's right. So at least my spouse is. Sarah is so much smarter than me that it scares me sometimes, especially when it comes to people themselves. She can really spot people for their sincerity or lack of sincerity. She's got a tremendous knack for doing it. I wish I was able to be so lucky and have that. One other question someone asked about the corn market. We're having a little bit of a rally in corn today, not much to speak of. It's basically a short covering rally. I don't see anything to do in corn at this level. We've only had a 10-cent bounce off of the bottom, and we'll see if that's it. We've got a call from all the way down in Mexico. Oh, my goodness. Charlie, are you there?
Yeah, I'm here. How are you?
What can I do for you, my friend?
I'm wondering what, the settlement in Iran with the deal they made. What do you see in oil? Where do you see it going?
Well, to me, it looks like oil wants to go lower. It's been making a series of lower tops for quite some time now, and in lower bottoms. If you'll give me 1 second, I'll refresh this chart here so that I can get my data working. And if I can't, it doesn't look like it certainly wants to do that right now. Oh, I know what I did. I didn't put the right symbol in. Give me 1 second here, Charlie. But, we got oil around 94-something a barrel. And basically, I think that what we really need to do is to get it down about another few dollars a barrel, right around 90. And that's when I think you'd have a really good chance of, entering the market for a potential bounce. But, all of the commodities, Charlie, that we're looking at are just getting hammered. There we go. I've got the oils trading just under 94. You'll be able to see it here in just a second. And it's got some pretty strong support at $90 a barrel, which is the 786 retracement. As far as these news announcements that you get out of there, I don't believe any of that stuff. The deals that those people make, and the fact that they make a deal and don't do it, that's very, very common. I hope that helps, Charlie.
Are you saying they're not going to follow through their deal?
I think oil's going lower, my friend.
Okay.
Hey, we've got the Dow up 25, the S&P up a few, and NASDAQ up a few. We'll be right back.
Have you subscribed to the Gold Report yet? On Wednesday, August 14th and Thursday, August 15th, Tom O'Brien advised his Gold Report subscribers to close out 6 of their 9 open positions, all winning trades ranging from a 10.69% profit to an incredible 48% profit in just one equity. Tom O'Brien brings an incredible wealth of knowledge and experience to the gold market and the equities within the industry. That's almost 12 years since this powerful newsletter first began. And right now, you can get a 30-day free trial to the Gold Report by visiting TFNN.com. Make sure you're a subscriber as this volatile gold market makes its way back into positive territory after declining all the way from $1,900 to under $1,200 an ounce in only 2 years. Get your 30-day free trial today by visiting TFNN.com.
with the launch of Tiger TV. TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, David White, Larry Pesavento, Andy Hecht, Victor Jones, or Daryl Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today. Wouldn't it be great if you could get a red light, green light indicator that gives you signals on 25 different futures contracts? Now you can with Taz Signal Box. This red light, green light market profile system dynamically updates 24 hours a day and provides you with important trend and trade signals on 9 different commodities, 9 different indices, and 8 different currencies. Right now you can receive a 2-week free trial to Taz Signal Box. For all the details and to find out how the Signal Box works, visit the front page of TFNN.com.
Patterns, profits, and peace of mind.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's trading newsletter.
Patterns, profits, and peace of mind.
In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the Forex market, and more. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 full weeks. That's an $85 value. Yours free when you register right now.
Get Larry's Patterns, Profits, and Peace of Mind.
And get the edge you've been looking for.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Okay, we're back, folks. So we've got a call from Michael in Toronto. Are you there, Michael?
Yeah, hi there, Larry. How are you today?
Good, thank you. What can I do for you?
Yeah, the previous caller stole my topic, but as an alternative, could you, since you spend a lot of time up here in Toronto, could you give me your opinion of Toronto real estate? Would you buy, sell, or hold?
Well, in the words of Will Rogers, buy real estate because they're not making any more of it.
But we have a Toronto condo bubble.
Well, let me tell you something about real estate, Michael. If you went into a room with 1,000 people and picked me, you would have picked the person who knows less about real estate than anybody in the room. I know nothing about it. I've bought buildings that have been so perfectly located that you would never thought that I would have lost money, and yet I either break even or get out with a small loss. Going back into the 1970s when I was at Drexel, I would put extra money into real estate. They never worked out for me. Of course, 3 days after I sold them, that was the start of the big bull market. So I know nothing about real estate. We have some property in Hong Kong that is just ridiculous. It's like $10,000 a square foot, and here in Arizona it's $100 a square foot.
Did your wife sell the property in Toronto?
No, she did not. No, she has a small condo up on the 40th floor in one of those big buildings there. She bought that for her sons when they went to school there, and now she rents it out.
I see. Okay.
Have they gone up? Have they gone up a lot?
I don't know. If she lived in Richmond Hill or downtown Toronto?
It was downtown, right downtown.
Oh, Harbourfront. Around Harbourfront?
Yeah, that's it. Yeah, that's where it was, yeah.
Yeah, you know the Pan Am Games is coming in 2 years, right? So they're building more condos here. So the supply of condominiums is going up, so it's expected to really depreciate the value.
Well, I'll tell her, but she's pretty smart doing what she does. I mean, I don't get in her way. I mean,
yeah,
she's a pretty good trader in her own right, but she's very good with real estate because she researches it quite a bit. But you know, there's just some tremendous bubbles across London. I mean, my God, London and Hong Kong. I mean, New York is not even a bubble compared to these other places. I mean, it's ridiculous.
Really? Yeah. Another thing is, with your computer always freezing up there, can I make a suggestion to you? Get more memory, more RAM memory for your computer. And
I have as much as I can get. Let me tell you, it's something else that's causing a problem. I'm not sure what it is, but it's not the memory. I've got plenty of memory and gigabytes and all that other stuff. But thank you for your information.
Here's a quick suggestion to you. Get yourself a used laptop. They're very cheap, under $200. Stack it with lots of RAM memory and put all your programs, all your trading programs on that laptop. So you have like a backup. Okay?
I have that.
That way you don't have the freezing. So you have two computers running at the same time.
I have 6 running at the same time.
Okay,
all on different systems, but that's
some virus or something running in the background.
Well, I'll get it fixed, but thank you for your concern, my friend.
Yeah.
We've got one other caller coming in, Michael, so I'd like to talk to them if I could. Mike from Dallas, are you there?
I'm here.
What can I do for you, my friend?
Well, 2 quick questions. What do you feel for the Dow futures over the next few days? And number 2, when you mentioned margin is at a dangerous level, what do you mean when you say that?
It means that people have been borrowing a lot of stock from the stock exchange. They're borrowing money to buy stock on margin. In other words, they're only putting up 20 to 50%.
Okay.
That's what that means. We come to the end of our show, folks. Live every day in an attitude of gratitude, and may God bless.
What's the one thing that pulls people back from the breakthrough that they're moving towards? What's the only thing that really stops people from taking action? You and I both know the answer, and sure, we can come up with the reasons why we're not where we want to be, but the only reason that we don't do more with our life is fear. Or if you're an overachiever, call it stress. Simply put, there's something that happened to us in our past that's holding us back from the life we deserve, yet you and I are okay, we're here. So why should we let our past control our future? Exactly. We shouldn't. Hi, I'm Steve Rhodes with TFNN.com, and when it comes to your trading and investing, I can help you overcome your fear of loss. Together, we'll turn weakness into strength with a system I've developed called Mastering Probability. I'll teach you how to make your money work harder for you than you do for it. I'll teach you the tools that provide financial freedom. Go to the homepage of TFNN.com, click on my name, Steve Rhodes, and begin your journey of mastering probability risk-free. It's time to become a pioneer of your future versus a prisoner of your past.